economy's dead. Had been their goal since forever now, to be the lenders and buyers of last resort, to basically replace the current system with a new one here. Now that they have the economy pretty much dead and buried, and the consumer right there as well, their next phase is pretty easy to figure out, in my view. They're going to continue to inflate, and they're going to use rate cuts as an ability to do that. A central bank's power resides in just one thing, and that's their ability to inflate, to create cash out of nothing, to create an environment in which they will need to monetize everything, and that's what's going on here. The more debt a central bank issues, the stronger they become. This is pretty much common knowledge now. Everyone knows it, and they're going to keep playing this game. This exact hand motion is something I've shown people for 10 years. This gap is going to continue to get wider and wider here. Eventually, it's going to get real, but this gap between the market and the economy is going to continue to go off the charts. It's just going to keep going. It's kind of interesting. You got these corporations here that are laying off people by the thousands. Something I said was going to happen last year. We're going to see this accelerate much further. What are they doing here? They're trying to get lean so they can, increase their bottom line by laying off people. Seriously, this is going to get progressively worse by people who have no idea where we're going. Again, it's a deliberate destruction. Fundamentals don't matter anymore. Things like forward guidance, PE ratios, balance sheets, all this, that doesn't matter. The market doesn't even price off of that anymore. It's been replaced by a system of easy money, monetizing the debt, and we're going to see a lot more of that moving forward. Now, a bigger player in this is war, an expanding war. This is going to be very, very positive for the stock market. Again, where does this cash come from? Do we have a war chest? Does any developed nation have a war chest? No. The Federal Reserve, in this case, has to make the cash created out of nothing, and so we can fund all this stuff. And the more cash they create out of nothing, the higher the market's going to go as the purchasing power of the dollar gets erased. This whole issue with inflation, it's been the biggest farce in the history of the world. Oh, the Fed's in the fight of their lives. It's a joke. They've gone out of their way to create inflation. They're not going to stop doing it. As a matter of fact, we just got a warning from BlackRock today that, imagine my shock, that inflation forecasts are going to be way, way, way off, according to BlackRock. In other words, we're going to see a lot more inflation coming. I'm telling you, it's not going to stop. That's the mechanism here. And people just need to understand what's happening, and then they can get themselves on the right side of this. I've been telling people this for the longest time. The illusion of the market will be maintained. People still believe that there is a connection between the economy and the market, which does not exist in any way, shape, or form. So generally, people walking the streets who don't understand this, they see the stock market. Oh, wow, the S&P 500 just hit a new record high. This is fantastic. Our economy, we're booming. But then people look upon themselves and say, well, why can't I make ends meet? How come I got to keep borrowing from my credit cards? Why am I tapped out? My savings are gone. It's a crazy situation, but people don't know. They don't spend the time to understand it. They don't want to understand it. The system works because people believe it's going to work. Meanwhile, that's how they're taken advantage of by the Wall Street institutions, by the central banks around the world. Now, the great taking, I watched the documentary. Not a single person that follows my work should be surprised. That everything that was in there, I've been telling people way before that documentary came out. I mean, I watched it. I'm like, I wasn't even going to. I'm going to be honest with you, because I understood it in my own head. I said, the guy probably sees the same thing that all of us do, that understand how the markets work and how cash moves through the system. I've been buying this market every single dip that comes along for the longest time. I'm in this. I'm looking to get long of this market. There's no doubt about it. That's where we're going to go. Rates are going to get suppressed. There's going to be more reasons created to pull cash into the now. War is going to expand. It's all very positive for the stock market. No doubt about it. We're going to get record high, record high. I told everyone this was going to happen at the end of last year, before we were even there. I got laughed at. I got ridiculed. You name it, of course, but these are by people who have no idea how the market works, and I'm used to it by now. But this is just what's going to happen. It's got nowhere to go as long as they can keep risk at bay. If we realize, all of us, that central banks collectively are going to continue to flood the world with more easy money, and they're going to collectively cut rates moving forward, that's massively positive for the stock market. What's happening here, as well as war is expanding here, we've been bombarding Yemen now this entire weekend. The 10-year yield came down, as I explained to people that it would. Why? This phenomenon is so easy to understand. What the Federal Reserve is doing by their mechanism of instituting war and propagating war here is driving cash into the perceived, or what is understood to be, safety of debt, and that suppresses rates. When rates come down, down, it opens up a doorway for cash to make its way into risk assets, or in this case, we're talking about the stock market. That's the way it's going to go moving forward. So the Federal Reserve is using the mechanism of war, for which they back it all, to again push cash into the debt market, which will again inflate the stock market even higher, and this will help the Federal Reserve and other central banks as they begin to cut rates, and the market is going to go crazy. In my view, we're going to see bang, 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 bang. I mean, nothing goes up in a straight line, all right? But people, in my view, should be looking at thinking about getting longer this market, as I've been telling people to do for the longest time. You got to be in here. If I'm going to own a company's stock or whatever, I want to be paid for that. I want a dividend, okay? I want to generate cash flow. I own a lot of ticker JEPI. I started to buy a lot of JEPQ. I obviously own a significant amount of gold, silver, platinum, palladium, cryptocurrencies. I own artwork, musical instruments, classic cars. I mean, I own a lot of things. You got to be more or less diversified and ready for when this is going to come down. Now, look, people don't need to guess here. I want to take the guesswork out. There's people who every single day sit there and focus on what the Dow Jones Industrial Average is doing. And if you notice, this is what CNBC, Fox Business, Bloomberg, they got everyone focusing on the Dow 30 or 30 companies. It's nonsense. It's nonsense. People should not be looking there at all. They need to be looking at risk in this market, and they can gauge that by looking at the 10-year yield, the relative strength of the dollar, and better yet, I created my own indicator, and it's free to everyone. It's called the MMRI, Mannarino Market Risk Indicator. It's right on my website, traderschoice.net. It's a neat little equation which defines risk in the market in real time. So people should pay attention to that. Again, it's free. There's no sign-ups. It's just right there. I haven't bought more gold or silver in a long time. I've been buying silver since it was like $8, and gold since it was maybe 700, maybe a little around $700. So I built up a pretty good stash of this stuff. At this time, I feel pretty good with what I have. I'm looking to buy more of this market right now, get more involved in cryptocurrencies here. I think people need some of this in their portfolio. What do people always think about when they hear that word? They think of pretty much one thing, and they think of Bitcoin. Especially now with this Bitcoin ETF, this spot ETF that just came out. It's going to get a lot more attention, I think, Bitcoin here. We can expect a few things to happen here. We're going to see more volatility with regard to the price action because of, I believe, the ETF is going to cause that. And you're going to see a lot of institutional buying on the back of it too. I've been telling people for I don't know how long that they need to have some cryptocurrencies in their portfolio. If they had to pick one, that would be it, okay, in my view, because again, it's the one everyone thinks about. It's the mommy of them all, pretty much. So of cryptos, I own a few of them. I own like maybe 5 or 6. That's my largest holding right now. I just pulled profit at around, when did I pull my profit out of here? I don't know, I forget, it was maybe 38 grand. I pulled profit out of it, and now I'm playing with their money, and I actually took some of that cash and I reallocated that into JEPQ. Again, I'm always moving money around. The current system is dying. We are in a full-blown liquidity crisis right now. People aren't being told that, and central banks have to make up the difference by, again, inflating here. We're watching the purchasing power of currencies, and central banks have been killing their currencies now, I mean, since like almost forever, literally. Sucking the purchasing power out little by little, almost like the boiling frog syndrome. But this system is dying in its current form, and they want to simplify the system. The central banks of the world are looking for a system which they can use cross-border, almost like a single one world currency without having to worry about transfer rates or anything like that. And I've already outlined for people what it's going to be, and it's very clear. We're going to have a completely tokenized system. Every asset is going to become tradable via a token. People are going to have to face up to that, because that's where we're going, and there's literally no way to stop it. The central banks have been working towards this since their inception. I mean, central banking, this whole thing, they are so methodical, they are so exacting, they know exactly what to do because it's all been thought out before. We're living in the side effect of what central banks have planned out almost a century ago, and it's going to go on and on and on. They lead the people down this pathway here. They're creating dependency on the current system, slavery to the current system. This kind of sound like the Great Taking, because that's exactly what this guy was talking about here, on their system, until they issue in this completely new system. And the problem is, and by them making people dependent on the system now, it's going to be easier for them to implement, but they got to destroy the current system. And we're seeing it come apart right now in the economy of the world, which which is cratering at its fastest pace we've ever seen. And it's just not going to stop until they're done, and they're not done. We're going to see this go on and on and on, at least until the election, and then we'll have to readdress this because they want to get through that first by keeping the markets inflated. If you're looking at this from a financial standpoint, it could not possibly be easier to understand what we need to do. Okay, if we realize that the market system right now, the risk on environment is going to be maintained. Risk on meaning cash is going to be pushed into the stock market. But with regard to understanding that eventually we are going to get a meltdown on the system at the point of their own choosing here, it's not going to start in the stock market. Everyone's focused again on the stock market for a reason. That's why you got the CNBCs, the Bloombergs, the Fox Business telling you to look at the stock market. No, wrong place to look. The debt market is going to be where this is really going to melt down. Okay? Eventually we're going to see the debt market sell off so fast, people's heads are going to spin around like the freaking exorcist. You're going to see rates spike in an uncontrolled fashion. What will that do? That's going to put pressure on world stock markets. And cash doesn't just fly away to money heaven. It's going to move. It's going to move into commodities. Number one, suppressed assets, silver, my favorite asset of all time. Cash will bleed out of the debt market, putting pressure on stock markets. Like I say, cash is going to move around. We're going to look for places to go. Commodities, I think people need exposure to it. I think people need to hoard gold, silver, even copper. I got that too. I happen to like copper too. I think people need also some crypto, as I said, in their portfolio because I think cash is going to make its way there too, as well as musical instruments here, artwork, other things too. Cash just moves through the markets in relatively predictable patterns. Here's my hierarchy with regard to metals. Pretty simple. I like silver number one, gold number two, platinum, palladium a third. I don't rate them 3 and 4. I think they're equal right now as opposed to their value. Now, how do you gauge what their value is? It's a really good question. And I tell people it's a very simple equation as well. I try to break this down really easily, okay? You look at where the Dow Jones Industrial Average will eventually go. Who knows where the bottom is? We do know that the Fed jumped in here at Dow 6,000 with QE1. The bottom of this market could still be somewhere 6,000, 8,000. It's nowhere near where it is now. This is just market that's in la-la land on easy money policies and monetizing the debt. Okay, so I believe we're going to get a one-to-one with regard to gold and the Dow at one point. So let's say the bottom of the Dow is 6,000. Let's just say. Okay, I think we can get gold 6,000. I think the gold to silver ratio is going to be 15 to 1, 10 to 1. Do the math. It's not hard. Commodities across the board are going to skyrocket in this kind of an environment. So that's how it's going to play out, in my opinion. And I think, again, cash is going to make its way into other things too. Not just most undervalued, of course, but it's going to go in a lot of different places.